So welcome everyone. Thank you for joining this webinar today. My name is Nicola Morgan and I will be your moderator. Today we are presenting JobKeeper 2.1 update by one of our tax consulting partners, Mariana von Lucken. We have a couple of questions that have been submitted in advance, so they will be answered at the end of the session. If you do have any additional questions, just please put them into the Q&A panel in the Zoom control panel, and we will look to answer them at the end of the webinar. So without further ado, I will hand over to Mariana for her presentation. Thanks, Mariana.
Thank you. Good morning, everyone. Thought we'd put on another JobKeeper session. I mean, there's been a lot in the press about it, and I'm sure you've all read it yourselves. But there are some questions still out there, so thought it might be useful to have a chat today. I'm going through a presentation to cover off some of the items that I think will be relevant. It's pretty straightforward, really, but I think that by the end of this session, it'll be clarified. I just had one question pop into the question and answer saying, do employer-employee need to sign any new declarations to enter JobKeeper 2.1? No, there's no nominations required if you're already on the JobKeeper version 1. So just for those coming in, JobKeeper version 1 ended on the 27th of September, and we'll call it JobKeeper version 2.1 as the new one that goes from 28th of September, just in case you're wondering why I'm saying V1 and V2. Okay, so the timeline. So I think this is a good visual to give you an idea of where we're at and what are the real things that apply. So should we meet the tests, and we'll go through the tests. JobKeeper 1 is gone now, right? That's finished up, but we are still getting some payments. So some of you would have enrolled in October, and there'd be a payment still to be made in October. So you should be receiving that at the moment. We're on the 9th of October, and if you've done your projections, the normal reporting every month, you should be getting that. So the question becomes, can you get JobKeeper 2? And then, you know, what do we need to do? So you've got that 27th September to 30th of January. Just think of it as October, November, December. You need to meet certain criteria in order to get it. What do you get? Well, your employees get 1,200 or 750, depending on how many hours they worked, and we'll go through that. Then, and all you do is have to test your turnover. So if you're already in JobKeeper 1 previously, if you meet the turnover test, the actual turnover test, then that's it. You're in. You do have to make reporting, and I'll go through the reporting. But effectively, you're reporting whether you're a staff are going to earn the 1,200 or 750. What are you going to get, you know, back from the government? Now, say you did October, November, December. That's great, fantastic. Tick. You meet the criteria. You still have to test if you want to get it in January, February, March, and the tier or the payment goes down again. So we're getting all 1,500, nice and happy. Now it's going down to 1,200 or 750, and then it'll go down to 1,000 or 650. Next slide. I don't have control on my slides, which is unusual for a person that likes control. Okay, this is just a little wheel summary of what I've just said. I'm going to say things, the same things maybe in different ways, because sometimes people aren't listening, because I know I do the same thing. You're in your emails, you're doing other things. But come back, pay attention. It's only going to be a short presentation, and I'll try to get all the information out there for you. So we're referring to the new JobKeeper, JobKeeper version 2.1. We've extended it 6 months. We've just talked about. Employers will be required to reassess. So yes, we're reassessing. So they're going to look at actual turnover. Simplest way is look at your BAS for the quarter. So July, August, September 2020 versus July, August, September 2019, do you have a drop? Now, what is that percentage drop? Well, what was it before? So nothing really changes there. 15% if you're a charity, 30% if you're under $1 billion, and 50% if you're over $1 billion. So pretty much keeping the same rules as JobKeeper 1 with some minor changes. So from September 28th, it'll be stepped down, as we've talked about, and we'll talk about how in a minute. We're split into 2 tiers. We need to notify the ATO, and that'll be done through the portal, like you're always doing. You'll have till the 31 October of this month to do that. So at the beginning of the month, you would have been reporting for your September payment. Now start thinking, okay, what do I need to fill out in my system, payroll system, notifications, and so on, and we'll go through that. So JobKeeper remains open to new recipients. So if you weren't on JobKeeper 1, you could potentially meet JobKeeper version 2.1, but you still have to meet the criteria for JobKeeper 1. So the question is, why weren't you on JobKeeper in the first place? But anyway, let's leave that aside. If you're a very unusual situation like that, I think you'll need to have a chat with us separately. And remember, we talked about it in last presentation that anyone that sort of joined 1 July and before can now be entitled to the JobKeeper. Permanent employees, part-time, and long-term casuals. Long-term casuals, if you recall, you still need to have them for 12 months. Next slide, please. So again, this is just another way of showing the same thing, where the periods, we were getting 1,500 from the 28th of September, and you still have those fortnightly, so it'll be the 28th of September to the fortnight of whenever that is, and that is going to be 1,200 or 750, and so on. Usually the second tier will be on those people with lower hours, so less than 80 hours. So it'll be more of those part-timers and casuals, potentially. Next slide, please. So here's the important thing about working out the hourly rates. And look, it's hours worked by the individual in the referred period. So you look at the individual and you say, okay, whether they did 80 hours or more, and you look at each individual one. Now, when do you test? And I've got a slide sort of further down when you can test. I think it's the next one, but let's just look at this for the moment. I'll go into more detail in a minute. So the 80 hours, more than 80 hours, you'd get 1,200 or, 1,200 and 750. Just look down the line if you're under, or depending in the quarter that we're talking about when you're going to get the money. So next line. So there was a question about whether you can apply, so if you're an eligible employee, usually if you're a permanent employee, you're going to be 80 hours. So your permanent employee is 80 hours, that's going to be the case. The question is, there's 2 periods, and they call this the reference period. But they basically, it's 28-day period ending at the end of the most recent pay cycle that ended on 1 March. So you look at 1 March and you say, when did your pay cycle end? So say it's a monthly pay cycle and you got paid on the, 28th of February. So you look at that 28 days before that and you look at how many hours did the person do. Now, again, if they're permanent employees, most likely they'll be doing 80 hours. Now, you can choose, if that didn't work for you, or the person even one didn't exist then, you could look at 1 July. You can have a choice of 1 March or 1 July and look at the 28 hours before. 28 hours. I keep saying hours, don't I? So 28 days. Apologies. And so you can look at different employees. Some could be on March criteria. Some could be on the July criteria. It's your part-timers, really, and your casuals, which you're going to probably have a little joy with. And you're going to have to, if they started in 1 July, obviously you can only use that test period of the 28-day period before the 1 July. Now, so you could have different staff members starting at different times, but they're the only 2 reference periods. There are other reference periods, which I'll go through in a minute, but in alternatively, exceptional circumstances. We'll discuss that. Now, I'm mainly focusing in this presentation on eligible employees because a lot of people on the call are really under JobKeeper for employees, but it does still apply for eligible business participants. So say, for example, you're a director and owner of business, but you don't get paid salary and wages, you get director's fees, which is not unusual. So you could nominate yourself to be the business participant and you would get in 1,500, a fortnight or 3,000 a month. Now, you're still eligible. The only thing is that you can only use 1 standard period to test, being the February. meaning 1 March effectively, the period before that. And the same for religious practitioners. Next slide, please. Nicola, thank you. She's there magically working away there. So we're talking about before an alternative. When do you know, say for example, the total hours a worker is paid, there's an absent, and it was less than 80 hours, but it's not representative of employees' hours, a typical 28 days. So you looked at the one before 1 March or 1 July, and for some reason it isn't. So you can use the 28 period ending the 28-day period ending at the end of the employee's most recent pay cycle before 1 March or 1 July, which the employee worked a total of normal hours. So that means instead of the, you look at we were talking before about the pay cycle before March, you might look at the pay cycle before that, so a month before that. So again, it looks at it in retrospect. So instead of February, you might do January or a different month. Again, always document why you're doing your things and get it reviewed if you're not sure. Mightn't have been employed for the whole reference period, might have been a reason. Employees started before 1 March or 1 July, but the pay cycle ended, so there's not enough time there. So this is when it talks about looking at different days. Again, if you're in that particular circumstances, we should discuss it. Go to the next slide, please. So I like this slide, because it really just sort of articulates a little bit better what you get in the month. If you're a monthly payer, what are you going to get? So if you think about it, your pay, the fortnight is 28th of September to the 11th of October and 12th of October to the 25th. Now, normally, you know how they talk about the fortnights and you have to have you have to be paid by the fortnight and everything. Well, they've made a transitional, extension, as they have done previously. So you have the 30 till 31 October to meet the wage condition, meaning you don't have to do nominations, because theoretically you would have done your nominations already, because you're already on JobKeeper 1, right? So no nominations required. There could be a situation where a nomination might be required, and I think that might be that they might have been an employee of yours for a little while, but maybe they're part-time or casual, and they were on JobKeeper. They'd nominated another employer to give them JobKeeper, and that employer employment has now ceased. Potentially, they could come into the JobKeeper with your organisation. So maybe a nomination is required there. Very unusual circumstances, but in most cases you would have already made your nomination, but you may not have made the minimum payment. Okay, so this is the wage condition where you have to pay them the minimum amount. So what is the minimum amount you have to pay them? Well, it depends on how many hours they would have done per our previous slide. So if they've done the 80 hours, then the 1,200 is the amount that they would have had to be paid, and you have to pay them for that month 2,400 if they're not getting anything else. Okay, so that's, say the person is still stood down, or say the person is getting a lesser amount, then you have to top them up to 2,400 a month. Okay, now you can do that in weekly payments and you divide it and so on, or fortnightly, depending on what pay cycle you're in. Now remember that if you're already paying someone more than 2,400, you don't need to do anything because you're already meeting the condition. Now, if they're less than 80 hours, you have to pay them 750. If you're not paying them anything, you have to at least pay them the 1,500 a month, or the 750 for the fortnight. So those are the things that you need to do before 31 October. Meet the wage condition. Do nominations where they're required. In most cases, you don't need to do it again. There is another criteria that needs to be done, and I'll run through it a couple of times, but through your single touch payroll, when you're doing your payroll, you need to nominate what tier that employee belongs to. Now, it could change month to month or fortnight to fortnight, right? But you need to identify depending if you're paying monthly or fortnightly. And so I need to identify through the single touch payroll what tier they're in. Now, sorry, that shouldn't change month to month. I just lied there, because remember you're testing. I didn't lie on purpose, so it's okay. It's a white lie. Because you're testing at before 1 March or you're testing 1 July. So, you're going to be 80 hours or not. It's not going to vary any more than that. It's not going to change. So you're going to be in that tier until the end of December for 3 months. Now here it just lists out the fortnights. Okay, your pay cycles meet somewhere in between, but remember, ultimately it's as long as you've made the minimum wage by that end of that month. And you till the end of December, you've tested, then you have to test again if you're going to meet it for January, February, March. If you can, next slide, please. So there's certain things that haven't been changed in the rules. So meaning what is an eligible employee, and I'll run through that again for you. An eligible business participant. So who are your eligible employees effectively? Requirement for employers to meet the wage condition, which I just discussed. A specified percentage, the decline in turnover, the aggregated turnover, where we do that test first to work out what percentage. That's still the same, so you just use the same percentage. Special rules relating to service entities. This is where you use a labour hire entity. Your employees are all employed in a labour hire entity, but you have other profit, you have other entities that make the income. So there's specific tests for that, and you'll know yourself if you're already in that test. Ability for ACNC to select exclude. So you can still exclude government grants to do your calculation, and we'll go through the calculation in a minute. Now, for the not-for-profits, they do include donations. Normally that's not situated in the BAS, but you still include the donations as part of your calculation. You have an enrolment process, just like we processed before, and that's all on your portal. Now, if you're going through your agent, that's the same thing. And, going through your payroll system, which is your single touch payroll, nominating what tier your employees are going to be on. You'll have to the 31 October. The timing of the payment, it's in arrears as usual. So basically for October, you'll get paid at the beginning of November. So just like the old JobKeeper's working. So monthly reporting, you'll be still doing your monthly reporting. I'm not sure if it says projections, but probably likely. Rule that prevents more than one employer claiming the same employee. Yeah, so you can't, basically, the JobKeeper, only one employer can get JobKeeper. So same rules as to say that usually if you have a person that the permanent employee in one organisation, they're entitled to get JobKeeper in that organisation. Tax treatment and JobKeeper payments, the same thing. They'll be accessible. If you go to the next slide. Now, what the Commissioner brought out was the alternative decline in turnover test. So if you do not meet the basic test, you can use one of these. Same as before the test, pretty much, right? There was some minor modifications, but very similar. It's just about what timing of what you're testing. Now, when would you apply these? Okay, victims to bushfires, maybe you're a sole trader, you were sick, injured, or you're on leave. Bushfire drought, I should say as well. Maybe you tested before because you commenced your business a bit later. You've done a business restructure. So things outside of the ordinary. Okay, and again, you may have had increase in income and so on. So I'm not going to go through these tests in detail because they really depend on the facts and you really have to sit there with the numbers. Next slide, please. Basically, if you meet the basic test, you don't need to go any further. If you don't have, you can use the alternative test if you don't have a comparative. If the comparative doesn't make sense. And there's modifications there in the rules to deal with bushfires and droughts. So if you're one of those businesses affected by that, there's certainly some concessions. Next slide, please. So conditions for eligibility. So everybody asks, what are the conditions? So some of the conditions. Entity is entitled JobKeeper for an individual for fortnight. And remember, they talk about the fortnight. If the JobKeeper is a JobKeeper fortnight. So we talked about the fortnights. There's a list of the fortnights. So we do have fortnights. Now, people get paid weekly, they get paid fortnightly, and they get paid monthly. Now, ultimately, so long as they're getting paid by according to that schedule, you'll be in, and you've made the payment. So the minimum payment, which is either a tier 1 or a tier 2. We'll have a chat about that now. Tier 1 is you worked 80 hours or more, which is probably most of your permanent employees, and tier 2 is under 80 hours. And you have certain times to check it, remember? So you can check it for between 1 March, before 1 March, 28 days of your last pay cycle, or 1 July, 28 days before that, your last pay cycle. And then it's set. Once you've tested, you're set, right? You're either 1,200 or 750. And then in the January, February, March, you're either going to be 1,000 or 650. And you notify through the STP. Employer qualified for JobKeeper for a fortnight. So your employer, as an employer, you still have to be carrying on a business at 1 March. That still stands. Now, if you're in JobKeeper 1, we're fine. Satisfied decline in value in turnover test or before the end of the fortnight. Okay, we've tested. When are we testing? Fortnight starting after 28th of September, satisfy the actual decline in turnover test. So this is what the change is. It looks at the actual. It probably makes it easier, but it also makes it harder for some to meet the criteria. So it looks at, it talks about fortnight, but it is the quarter. So the quarter being July to September. So you get your BAS for 2020 and you compare it to your BAS 2019. What do you do with your BAS figures? You take out the GST, you take out the GST free. Now there's some modifications if you're in a GST group. So again, you've got to check those kind of things. If you're just an individual entity, it's a pretty straightforward calculation. Now this is just keeping in mind that you're in JobKeeper 1. If you do not meet that test, that's your basic test, and you have a good reason to go to check your alternative test. Now, look, with the alternative test, if we go back just to 2 slides, I think, Nicola, where we go back to the alternative test, that one, yeah. The logic would make, it would be this. If you don't know if you had a substantial increase in your turnover, you think you did. Or maybe you think your business is irregular and, there's criteria to meet. Now, when you've done these tests, if you don't have substantial increase in turnover or you don't have irregular, you're not going to meet these alternative tests anyway. So it's worth giving them a go. That's really what I'm trying to say. Because, you might think, oh, do I meet it or don't I? Well, test it. I mean, at the end of the day, it's based on the numbers specifically. So what documentation? I always recommend you have your workings, you have the detail of everything you do. Okay, it doesn't take that long to put that together and to calculate it, and maybe get it checked by your tax agent. If it's us, great. Maybe get it checked by a friend that knows what they're doing, hopefully. Next few slides. The next one, thank you. And the one after that. Thank you. Entity is entitled JobKeeper for an individual for a fortnight if, because they always talk about fortnights, but it's not so hard and fast, right? Individual is an eligible employee for the employer for the fortnight. Okay, eligible employee, resident of Australia. Does those things ring a bell? And I'll go through that criteria in a minute. The employer satisfies the wage condition for the fortnight. The employer must pay every eligible employee the minimum amount in each fortnight. So yes, generally it is a fortnight. We get the extension to 31 October to top it up if you haven't already done so in that particular fortnight. If your pay cycle's monthly, again, you just have to work out the numbers so that it meets, if you're not paying them anything at all. If you're already paying over that amount, don't worry, just keep paying as usual. You met the wage condition. It's only where you've stood someone down or you're not paying them the full amount that you in that fortnight or in October, at the end of October, then you have to top them up. Employer notifies the commissioner of their participation in roles. Well, you already sort of did that. You did that back in JobKeeper 1. So tick, we're in. How do you enroll into JobKeeper 2.1? Well, there'll be, it'll be through you continue as normal by putting in your forecast and through your single touch payroll by identifying the employees and what tier they're in from a wage perspective. Next slide, please. Employer notifies the commissioner required information for the fortnight. Okay, so here we go. This is where the employer says to the commissioner through the portal, details entitlement for the fortnight, tier 1, tier 2, details of eligible employee, the name, and the higher rate. This is where you're doing this through your single touch payroll. So through 0 should be, it'll give you prompts to follow through, and through your either the agent will do it through the portal or you'll do it through your own business portal. Employer has not notified the commissioner that no longer wish to participate in JobKeeper. So if you don't fill anything in, you're notifying that you don't continue, basically. Integrity measures, just to be careful again, you don't go into entering into any schemes or doing anything dodgy. If your sole purpose is to meet the criteria and to get into JobKeeper, that can get you into problems once they can start conducting audits. Next slide, please. Okay, so we talked about eligible employees a couple of times, and just to remember, there was that rule in JobKeeper 1 in, all in. So the employer can't choose who's in, you're all in. If you meet the criteria, all in, same as before, no change. You don't need to do another nomination notice. We've already done all that. The employee can say they don't want to be on JobKeeper. If they say they don't want to be on it or they can't be on it because they're getting it from somewhere else, fine. That doesn't mean you have to force them into it. No problem there. No issue at all. Nomination notice must be given to the relevant employee within the 7 days of enrolling in JobKeeper. We've already done all that if you're in JobKeeper. If you haven't done it, well then you need to meet the JobKeeper requirement 1 and you'll need to put that in place, and we can discuss separately. Individual is a relevant employee if they were employed by the employer on 1 July. So 1 July and before. Must be employed by the entity on that day or the employer enrolls in JobKeeper. So 1 March, if that was the case. If you're a long-term casual employee must have been employed on a regular and systematic basis at least 12 months ending on 1 July. Now, we've already done the test for regular employees from 1 March. An individual's relevant employee, okay, so here is where we talk about them, they were 18 years old, or if they're 16, 17, there's a time frame there. They meet this prescribed residency requirements and excludes temporary visa holders. So this is nothing new. This is all very similar to what JobKeeper 1 was. Next slide. Eligible employees, so an individual is an eligible employee for the fortnight. Their relevant employee, residents, are on 1 March an employee, or 1 July, are employed by the entity at the time in the fortnight, yep, they're employed, are not a permanent employee of another entity. So if they're employed permanently by another entity, that other entity is entitled to the JobKeeper. Casual's okay. Agree to be nominated. This is where the nominations have already been done. Have not nominated to be an eligible employee elsewhere, and are not excluded from being eligible employees receiving, okay, yeah. Sometimes government paid paternity leave, parental leave and so on, they might be excluded, but then once they're off that and they're back on board, they could be entitled to JobKeeper. You may need a nomination at that point. Next slide. So this just keeps in mind about your BASs, when you need to lodge them. So your BAS is due for September to January. It's important to do your BASs. I think if you get nothing out of this presentation, get your September BAS lodged. That's very important because that's what you're going to be using to compare the actual, whether you meet the criteria or not for the next JobKeeper. And also look at your employees to see, you know, whether they're 80 hours or more or less. Next one, thanks. There's a typo on that slide, I just noticed. If you go back, Nicola, we can change that. It should say less than 80 hours so just less than 80 hours for the reference period. Just get rid of 20 hours work per fortnight rate. So don't get confused by that. Next slide, thanks. So JobKeeper, this is just a summary. You're getting your last payment in October for JobKeeper version 1. For your next JobKeeper, you need to reassess, get your BASs done, use your BAS figures, use the exclusive of GST. If you're a charity, include donations. If you're a charity, you can decide whether you exclude grants or not. If you're already in JobKeeper, just use the actual. So September quarter to the 2020 to 2019. And a reduction in the pay, so look at the 80 hours reference period for your employees. You can do it at before 1 March or 1 July. Next slide, please. Again, if you want to continue on, it'll just click along nicely. It'll just be what you have to fill out in your portal. You'll have to reassess again. Be important here to do your December BAS. Now you do have extensions for your December BAS, but I'd say that maybe you need to consider doing that a bit promptly in January, because if you want to consider whether you meet the criteria for the JobKeeper to continue. Again, the pay rate or the tiers are gone down, and look, I haven't changed that unfortunately, so I can just see there that it's 1,650, but we need to change that. It should be 80 hours reference period and then 80 hours, less than 80 hours for the 650. It's funny when you're looking at these things what you do miss. Business participant, you can still get it as well, and just need to test that at a specific time. There is this thing about Fair Work, 10% decline in turnover. So say, for example, you're on JobKeeper, right? And you JobKeeper version 1, but you couldn't continue to JobKeeper 2.1. So you're not going to get it in September to December and January to March. You're sort of clear on that because you've increased your turnover. There is a way that you can elect for the Fair Work Act provisions, because, you know, they were concessional really, about changing hours and so on for employees. I'm not a Fair Work Act specialist or anything lawyer, but just to be aware of this, I think it's a very good thing if you are doing certain things with your employees. Normally it's very difficult to change their hours and so on. So Fair Work Act, if you want to continue with these concessions that are given to people in the JobKeeper. So if you qualify under JobKeeper, you automatically come within these concessions, right? But for legacy employees that have already, they've exited JobKeeper version 1, you know, so they're finished up. They can't get JobKeeper 2.1. You can choose to apply the modified Fair Work Act provisions up to basically end of March. But you do have to have a 10% decline. Like a 10%, you don't need 30. This doesn't mean you get JobKeeper and nothing like that. This is just allowing you to use these provisions, which are more concessional than the usual concessions. The usual provisions. So an employer must satisfy the 10% for each quarter below given. So you need to meet it for the June 2020 quarter. You compare it to June 2019. You need to meet it September quarter. So you need to meet both of those to start getting the Fair Work Act to apply till the end of December. And then you need to meet it for the December quarter if you want it to apply till March. Now, you know, it just depends on what you're doing, but it's something that some employers are considering. Next slide, please. So it must be issued by a qualified accountant. So we have done some, a registered tax or BAS agent. No prescribed form, but there is a template available. And some small employers can use a statutory declaration. It impacts the accounting profession, I think, because it's additional workload for us. Accountants are recognised to operate under the Fair Work Act area of legislation, which is most accountants. We're not familiar with that area, but we're looking at the turnover. I think, you know, for accountants, for those, you know, in the HLB community, you have to look at your PI insurance and commercial risk if you are doing this test. Because sometimes, you know, you think, oh, well, it's just checking the turnover, click, 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 tick, 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 here you go, sign off and off you go. But there's other issues involved. Say somebody sues, an employee sues an employer says, oh, well, I'm under this fair work concession, and they're not, it wasn't done properly. And I think sometimes you have to ask yourself, do clients see the value in this? Because it can be a bit of work. Next slide, please. So I think it's relevant for the HLB community members to think about, and also those are other practicing accountants, and also clients on the call. It's really about whether you want to fit within those if you need to. And if you need to, well, that's a question of a legal term, what concessions you are using under the Fair Work Act. You know, like standing down people, things like that come under the JobKeeper. So just a quick, this is the last slide, and then I'll go to your answers. Just a quick thing on the budget, you're probably all sick of it. Personal tax cuts have been brought forward to 1 July. So meaning that for 7 million individuals, they'll receive tax relief of about 2 million or more. And that doesn't look like more for, that should say 2020 income tax return. It was a bit late when I was doing these slides, so you must forgive me. So I'll change these before we send them to you. The interesting one was loss carried back. I thought that was an interesting one. So if you make losses in your 2020 return and you made a profit in your 19, for example, you can carry back that loss up to the profit amount, up to sort of the tax amount, if you like, and offset it. So you can utilize it and get a refund on your tax. That's the whole purpose of it. You're getting a refund on your 2019 tax paid. So it gives you extra cash. So it's quite a good idea. It's only going to be there till 30th of June 2022. So that's nice. And the other side of the coin is the superannuation guarantee rate, you know, how that's increasing. And it's supposed to increase to 10% on 1 July 2021. There was nothing in the budget about that. So we assume that it continues unless something further comes out on it. There's been, there's different tiers to this. It's quite complex, but effectively your instant write-off for small to medium business normally is, for small business it was like $1,000 or something like that, and went up to 30,000, then to 150,000. But now it's kind of like increasing what the write-off can be up to 30th of June 2022. You have to check these rules pretty much, because it's not such a given that you spent, I don't know, 200,000, you can get a deduction for it straight away. So you have to meet certain criteria, and you have to either be a small business, medium business, and large business, and they have different rules for each one. Quite complex. Now, the other good news is the company tax rate. So for 2020, the tax rate is, I think that's, I've mucked it up, haven't I? Yeah, I have mucked it up. The dates are wrong there. But to 2020, effectively, the tax rate is 26%. And for 2021, the tax rate is 26%. So 2020 is 26%. 2021, yeah, we're in the 21 right now. So 1 July 2020 to 31 July 21 is 26%. That is correct. And then 30th of June 2022, it'll reduce to 25%. So at your 30th of June 2020, which is 1 July 2019 to 30th of June 2020, is 27.5. That's the tax return you're probably all doing right now. But in the new financial year, it's going down to 26. So you can see that the tax rate is going down to 25. The capital gains rate is what, about 24.5. So it's marginal tax rate divided by 2 is usually get 24.5. So there's not much of a margin between the company rate and the capital gains tax, you know, so where you hold your assets might be different. At the moment, the way that these tax rate look is that you look at whether you've got an active business or not. So If you've got a passive business, you're probably still on the 30 cents in the dollar, unless that's changed, but I haven't seen that yet. Also, there's a fair few tax concessions for businesses with the aggregated turnover of under 10 million, and they're planning to expand that to businesses up to 50 million. So simplified ways of doing certain things. So that's been great. And also the R&D, there was a bill to change the R&D to reduce the rate, to make it significantly more complicated for businesses with turnover over 20 million. Well, they've scrapped that. That's great. And they're actually going to leave the rate as is and make sure that it's still 43.5% going forward from 1 July 2021. So that's good news. So that was the main thing I had there. So we should go to the questions now, because I know everyone's probably more interested in the questions than talking about that.
So we'll start with the questions that were submitted beforehand. Some of them you may have already covered off, Mariana, but we'll go through them anyway. So there's a question around the testing method for new JobKeeper 2.1. Are you happy you've covered that?
Yeah, I think so. I think it's basically, if you're already in JobKeeper 1, go back to your September quarter of BAS. So if you do it monthly, just add up July, August, September, July, August, September, 2020, July, August, September, 2019, compare it. Did you have a drop? What are you comparing? You're comparing your GST supplies that are sitting in your BAS. You're not bringing into account your input tax credits, input tax supplies, and you're not bringing into account your GST-free supplies, and you take the GST out, exclude the GST. Now, a different calculation if you're a charity, you have to include donations and you can exclude grants.
And a question regarding evidence to be retained for audit purposes.
Yeah, I just think it's the same evidence, like if you're doing the JobKeeper calculations, just where you get your calculations from, how you back them. Like if you're in JobKeeper 1, I think the same thing applies. If you're doing the basic test, you could apply it on an accruals, cash. You didn't have to apply just what was in your BAS. Now, if your BAS is cash or accruals, you have to apply it that way. You could have used, there's other alternative methods you could have used, and there was a whole ruling on that. Just back up whatever you have and, sequence it in a memo or something like that. That's the best evidence you can have. For JobKeeper 2, well, if you've already got the JobKeeper 1 evidence, I think it's just a matter of your calculation.
Okay. If an employee has 2 jobs and is on JobKeeper with one company that then brings them off JobKeeper, can they be added to the other company's JobKeeper list as long as they were on the payroll as at 1 July?
Yeah, it's a tricky one. I was just thinking, because I think they can't be on JobKeeper if they're permanent employees of another organisation. So if they were permanent employees of another organisation and they're a casual for you, they have to nominate that employer. Now, I'm just not sure of the answer if that employer doesn't meet the JobKeeper, can then we nominate them under ours? I don't know. I'd have to confirm that one with you.
Okay.
So we'll come back when we send the slides. So can you keep that one, Nicola?
Yep, I'll note that down. And then there's one...
Sorry, just generally though, but normally if they were no longer employees of that other organisation, I think, yes, they could nominate and come within the one in all in rules of that organisation because they're not employed anywhere else. That's the only thing it's just where they're employed in another place. I don't think they necessarily can, but I just have to confirm that.
Okay, there's a question regarding the reference period for the 80-hour threshold test. Can the organisation pick the most beneficial reference period for each staff, or do we need to pick one reference period, e.g. 1 March, and apply it to all?
No, I mean, you can look at it individually. I think it'll take a long time, but you can look at it individually and say, should I use 1 March? And I look at when the payroll cycle ended before 1 March and go back, and say, well, 28 days, did I do 80 hours or not? And then if that didn't work, then you could do July. Okay, so you do have that choice and you can choose different things for different employees. You can work it out. Now, if neither of them work for a particular employee because of maybe they were sick, they were on sick leave or something like that for that whole period, then you could use the alternative test, which is to say, for example, they were on sick leave from February down to July. So they couldn't use before 1 March and 1 July don't work. They probably could use the month before or a month before that, being January, December, that 28-day reference period, that makes sense. How do you do it? Document it.
Okay, and now we'll go through the questions that have been submitted now. Is the 80 hours notice required to be given to the Commissioner for Sole Traders included in the monthly JobKeeper declaration online, or is there an alternative format?
Yeah, I think that if you're, because you don't do single touch payroll, so you would have to give the notice through the business portal.
Okay. What if you hire a temp or casual on 1 October 2020? How does the program apply?
Yeah, it doesn't, basically. You're out. You need to be an eligible employee either at 1 March or 1 July, basically employed before 1 July. So anyone employed after is out.
Okay. How about employees working 25 hours a week? Are they now paid $750?
25 hours a week. Well, again, you need to go back. If they're working 25 hours a week, go back to before 1 March, the payment cycle, and they look like if they're 80 hours, so that looks like 100 hours to me. 25 a week, 4 weeks, so that looks like 100 hours. So I think you're probably getting them 1,200. So again, it's not based on the weekly like it originally had. In our last conversation, I think it's based on the 80 hours. So I don't know if Nicola can just put that slide up on the screen, just sitting behind there. Right at the beginning, there's a nice diagram, that one there. Back, yeah. I think it's the next one.
Oh.
I'm just trying to think which that one there. So you look at the hours and you look at the reference period. That's the important thing to calculate it.
Okay, so following on from an earlier question, if you hire new employees during the last quarter of the year, October to December, are these eligible for JobKeeper 2.1?
No, unless they've rolled over a business or something like that and they become employees of the new business. But no, because they would have had to be employed, from 1 July, before 1 July.
Okay. If a sole trader didn't qualify for JobKeeper 1 because the income tax return for 2019 was lodged after 12 March 2020, does that test still apply for JobKeeper 2?
Yeah, I mean, tricky one. I think that you still have to meet the criteria for JobKeeper 1. There might be specific things for sole traders that I'm not aware of that would be worth investigating.
Would a 12-month maternity leave contractor engaged before 1 June be eligible?
Yeah, if they're employed by the organisation and they're a contractor.
It just says 12-month maternity leave contractor, yeah.
Engaged before 1 June. Okay, so so if they're basically employees from before 1 July, so they should be. It depends if they're called casuals or whether they're called employees, permanent employees or part-time employees. So permanent and part-time effectively, yes. If they're casuals, then the answer would be no, probably, because they'd have to have that 12-month history.
Okay. Do we need to identify the tier every fortnight, or can we only do this once because the employees will always be tier 1, for example?
Yeah, so yeah, you're right there to think that way, but really you're testing it before they've even, like, before 1 March or 1 July, so you don't need to test again. So once you've put in the tier, that's it. That's what they're going to get for the 3 months.
For a full-time employee over 80 hours in the reference period before 1 March, who started maternity leave on the 9th of March until next March and is not receiving a government parental payment at the moment, is she tier 1 of 1,200 or tier 2 of 750 fortnightly?
Tier 1. I go with tier 1. Yes, I like bingo. Yeah, because if you look at it, she was a full-time employee. So the reference period was we're talking 1 March, right? And you look at the payment the 28 days beforehand, and she was working 80 hours. So yeah, she's in tier 1. As long as she meets all the other criteria, she's an eligible employee, she's done a nomination, all those kind of things.
Okay. Is there or will there be an eligible employer re-enrollment process form for JobKeeper 2.1 required, even if the employer already did an eligible employee under JobKeeper 1?
If you're asking about the notifications on the portal, so on the portal, they will ask a few questions. I'm not 100% clear on what the questions are. I must say, personally, I haven't gone through it. But what you will have to do is you will have to re-enroll, but not like we did with JobKeeper 1. You know how we went through that process of enrolling, and then after that, there was a monthly amount? No. I think it's really just going to be your single touch payroll, where you effectively are re-enrolling through putting a tier 1 or tier 2, and then notifying through the portal the beginning of the next month, so November, notifying them the projections and the actual figures as they usually ask for the reporting.
Okay.
So you don't have to stick the reassessment anywhere.
Okay.
You just really have to do it yourself, notionally. Keep it on your records, effectively.
Okay. Yeah. There
But
was
you
a
have to
follow-up
lodge.
to that.
Yeah, but you have to have lodged your BAS. Okay, so make sure your BASs are lodged. September.
New question.
You're not going to get any money until you do that.
Is it relevant for the turnover test if you have a business that makes GST-free supplies to an overseas business? i.e., is that GST-free income excluded from turnover testing?
I have to come back to you that. It might be included, actually. I think I said it was excluded, but what is excluded is the input tax supplies. So GST-free supplies can be included in that calculation, but I'll just confirm that with you.
We just have a comment there from one of our fellow colleagues saying,
Yeah.
yes, excluded, but must have connection to Australia.
Included or excluded?
Sorry, excluded.
Excluded. Okay, must have connection to Australia.
But again, happy to confirm that later.
Yeah, yeah.
So what if an employee changes organisations and both were eligible for JobKeeper? The above question still applies. Are they eligible in the new organisation, and what do you need to document as evidence? So that's in regards to the person, I believe, who were they still eligible for a different organisation?
Yeah, I mean, if they're working for both organisations and they gave up one, no issue. But no, they have to be employed with the employer 1 July or before. So no, employer changes, or if you change organisation and it's not a change through a restructure, then they won't be eligible.
As a charity, do we need to amend our BAS to include donations, or still keep it the way it was done before and only prepare the donation figure for the ATO JobKeeper audit?
Yes, that's right. Look, it's a notional calculation effectively for the not-for-profits. So you don't need to include, donations aren't included. They're not taxable supplies effectively. But they put those in there because if you think about it, a charity is based on, a lot of them are donations and grants. Grants can be included in your BAS. Some are GST free and most of them are taxable. They're usually in there, but your donations aren't in your BAS, but you do have to include them for your notional because it can skew the figures substantially otherwise.
And a question, and I think this is relating to the work.
Fair Work.
Fair Work. Is it a 10% decline of BAS turnover?
Yeah, it looks at use the BAS turnover, and you have to do it for the quarter of June, meet that, and compare it to 2020 to 2019. But just don't get confused with this 10% turnover. This is not a JobKeeper thing in the sense that you don't get any cash for it. This is just so that your employees can, still be eligible under the Fair Work Act, although you can no longer get JobKeeper. All right, so just be clear on that. but you need to test it, and yes, test it on the actual figures that would be through your BAS.
Okay, new question. Director who earned monthly salary, can he be a business participant in JobKeeper? There are cases that the ATO disqualified JobKeeper of director as employee and should go for business participant. Measured in the ATO, it mentioned the ATO that for business participants cannot be employee.
Yeah, so if you're an employee first, you'll become under your employee JobKeeper. So you can't get business participant as well as being employee. That's what it's trying to say. And you wouldn't be a business participant if you're an employee. So you apply under employee.
Okay. What are the steps if you're not in JobKeeper 1 and you're not eligible in actual BAS for September quarter, but forecast to be clearly eligible in December 20 quarter?
Yeah, good question. I didn't answer that before, but if you're in, what are the steps if you're not in JobKeeper 1? Okay, so well, let me answer it a different way. So if you are in JobKeeper 1 and you don't meet the criteria to be in the October, November, December quarter, you can still be in the January, February, March quarter. So you test in December quarter and you might fail or have a 30% decline in turnover, or 15 or 50, whatever it is. So effectively you can still apply for the JobKeeper in January to March. Now, if you weren't in JobKeeper 1 and you failed the quarter of September, you're probably likely to fail in December. But if you do pass it in December, you still have to meet the criteria for JobKeeper 1. Now, if you didn't meet the JobKeeper 1, then you can't come into it there. It's my understanding.
Okay, do we need to inform all employees individually for their entitlements from 21 September onwards? Can we inform all the Tier 1 employees through one email?
Ooh, well, you're probably informing them on their pay slips anyway, when you're doing it that way. But you know, it could be probably an email that goes around that, you know, all these full-time employees will be receiving it. But the main thing to consider there is, yes, notify your employees, but how you notify them, so keep a record of it. But mainly it's because they're going to get some sort of a record anyway, is basically on the single touch payroll. That's what you really make sure you notify on that, what tier they're on. That's the important bit, because then that's what you're going to get paid. The 10% decline in turnover for the Fair Work provisions, you have to test June and September to be eligible for the Fair Work, assuming you got JobKeeper before, right? So you're likely to meet it anyway, but you have to meet the actual for June and quarter and September quarter to go into the December, to get it for till the end of December. And then you have to test it again for the December quarter to get it till the end of March, at 10%. So you might have 3 certificates effectively. So, you know, you need to meet it for those 3 periods.
Okay, well, that is all the questions, and we're just on 10 o'clock now. So I'll just launch this final poll question, which is, do you need assistance applying the alternate test or 80-hour work test in a relevant period? And Mariana's contact details are also on the screen right now if you would like to make contact with her about any other questions. But if there are no other questions, I'd like to thank Mariana for her time today, and thank everyone for attending. And I hope you all got something good out of this